Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us today. If you'd like to know the absolute latest on any commercial real estate related topics, check out our on-demand show podcast. For example, last week we covered trends in commercial real estate development, and the week before that I shared my top 10 success strategies for commercial brokers. There are lots of interesting shows to choose from. Just grab your phone, tablet, or computer, visit iTunes or the show website, commercialrealestateshow.com. Well, today we're talking about the U.S. office market. Please welcome my next guest, Jim Bacchetta, VP with Highwoods, a publicly traded REIT which owns or has an interest in 305 properties encompassing approximately 33.1 million square feet and 589 acres of development land. Jim, welcome to Studio One.
Thanks, Michael. Good to be here.
Well, we appreciate you coming in the studio today. And Jim, at Highwoods, you guys own properties all over the Southeast, and you said you own properties in Pittsburgh and Kansas City. You know, we heard from Walter Page, and he said that 2013 was the best numbers for the office sector than he's seen since pre-recession years, with improvements in rates and occupancy and absorption. So, but you're on the ground level. You're seeing the tenants. You're running these buildings, and Highwoods has them all over the country. What do you see as a market participant? What's really going on?
Well, Walter's got it right. This is definitely a good market for landlords, and we've seen generally in most of our markets 3 years or close to 3 years of net positive absorption. And this January has probably been the busiest that I can remember, honestly, in 10 years. So it's very good. I don't think that's just us. I talked to a lot of brokers, and most of the brokers are really running hard. It's good. We're in really good conditions right now. Yeah,
that's excellent. I heard the same thing at a large meeting of CCIMs last night, that everyone's excited, everyone's busy, and that's a good sign. And most of your properties are Class A office, right?
That's correct.
Yeah. Well, that's where everybody wants to be now, right?
Yeah, I think there's been a kind of a flight to quality over the last 5 years, especially during the recession, and when folks could get a better product for just maybe a little more money if they were in a B building, and the A product has definitely benefited, and now we're seeing good net positive absorption in the B category as well. So the market is healthy. It's getting better.
Yeah, that's great. Well, what are you seeing then for rates and incentives and tenant build-out allowances today?
Well, we're seeing some modest rent growth, and I think I think more rent growth is on the horizon. So it's good for landlords. Tenant improvement dollars are down a little bit. Concessions are definitely down. So net effective rates are popping for landlords. And, all those come into the equation, and I think it's just simple. It's supply and demand, Michael. You know that. I mean, it's as the supply diminishes, the demand, even if it stays the same, prices go up. Net effective rents go up, and that's really what we're seeing now. And I think most the CoStar folks would agree. I mean, they're projecting rent growth and most of the markets, particularly in the Southeast, where most of our markets are.
Right. Well, that's a good point. I mean, even with tepid job growth, we've seen a recovery in the office market, albeit we'd all like it a little faster. We're starting to see some good recovery, aren't we? And a lot of that's because of the lack of new construction.
Well, there's been no construction for 5 years in most markets, and you combine that with steady progress and job creation is the key, and that's happening especially in the Sun Belt and in the Southeast. So it's happening in most major cities are seeing at least some job creation. Nationally, we're not booming as far as job growth goes, but you combine the lack of new construction and new development over the last 5 years, and honestly, there aren't even starts in the works right now. So we're going to see another year or two of a dearth of new supply. That's just going to exacerbate the pressure on rates, and concessions will go down, tenant improvement packages will go down, and rates will increase.
So for most of your properties, are you back to, say, more normal incentives and TI packages in most of your buildings?
Yeah,
Or is there a normal?
I think, yeah, is there a normal? It's always fluctuating. See, it seems to always be going in one direction or the other.
Yeah.
And we've just come off the bottom, so we've got a ways to go to get to where we're really going to be happy landlords.
Yeah.
But we're definitely seeing improvements, and I think it will continue. And I don't want to become irrationally exuberant, because I think we're nationally, the economy is still, very, tepid, and it seems to be. We see growth in certain markets. It's not everywhere.
Mm-hmm. Well, let's talk about the availability of office space right now. If there's a corporate user out there listening, or a tenant rep with a large corporate user that maybe is looking for a headquarter size office space, in what cities and what markets could you accommodate them very well today?
Tampa and Atlanta, we have some big blocks available, 100,000 or a little more. The 100,000 feet. We've got in most of our markets, we've got smaller blocks, 50,000, 30,000 feet available. But there's activity. There's a substantial amount of activity, and the bigger blocks are going to be gone within a year. And so I think we've got development land in all of our markets, and I think what's going to happen is we're going to see some build-to-suits triggered, or some, maybe 50, 60, 70% pre-leases triggered in some of our markets as a result of supply diminishing.
Okay. And when these large tenants with these corporate headquarters types of tenants are looking for cities to locate and properties to locate, what do you see that makes them most interested in your building or your city or your property? What are they looking at?
Well, I think they're looking for recruiting advantages, and so they want to be in a city that's attractive, that has, a reasonable cost of living or a lower cost of living. They're looking for a city that has an educated workforce. They're looking for, Atlanta has a big advantage with its airport, biggest airport in the world, with direct flights everywhere. These are the kind of factors that weigh on a CEO's mind.
And what are some of the other ways that you at Highwoods are attracting tenants today? What are some tips? Are you doing anything new, or is it kind of the old tried and true?
Yeah, we're doing. I think the biggest thing we're doing is we're a well-capitalized real estate investment trust, so we're fortunate and we have the funds and the wherewithal to make improvements where we need them. If we have a big building or a big space that opens up, we're taking a very careful look at the building, at the amenity package. Does it need amenities? Does it need a sprucing up of a fitness center? Does it even have a fitness center? Conference rooms, common areas. Users are now looking for more we space, versus me space. They're looking for lounges and training rooms and conference centers. And so we, are fortunately able to deploy capital to enhance buildings as needed, and we've had really good success doing that in the last couple of years.
Well, that's smart. And I guess, have you taken some of your buildings from what somebody might consider a B to an A?
We
class?
Absolutely have done that.
Yeah.
Where we've had, we've got at least a couple of examples. I won't get into specifics, but a 30-year-old building that happens to be in an infill location, very well located, has structured parking, but maybe we haven't, it just hasn't needed a lot of attention, or hasn't been given a lot of attention because we had a long-term tenant in there, and they just were happy with what they had. We've come in and we've spruced them up, new finishes, new lobbies, added amenities, and it's amazing the response that the market has given us to those improvements.
Well, that's fantastic. Well, we're going to take a short break. When we get back, we'll talk about some trends in office tenant clauses, lease clauses, and in tenant build-outs. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you, including updates on the retail and multifamily markets. Be sure to catch shows of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, today we're talking about the office market. We have Jim Bacchetta here with Highwoods in Studio One. And Jim, in the last several years, flexibility for tenants has been of paramount interest to tenants, and one of the clauses that seems to give landlords and lenders and investment brokers like myself fits is when tenants have these early termination rights in their leases. What are you seeing today related to these kind of flexibility clauses?
Well, landlords hate termination options. Yeah. What do you really have in your rent roll if it's riddled with termination options? It diminishes the value of your asset and just something that we have been bullied around, frankly, over the last 5 years in the recession. And I can understand the tenant side because, with the uncertainty in the economy, they want to have options. But as the economy has strengthened, I think they're backing off a little, and we're feeling a little stronger in our position, and we're saying no. Sometimes we'll allow it, but depends on the circumstances, depends on the investment that we're making in the space. Right. If we make a big investment in TI, if there's going to be any kind of termination option, it's going to be out at least 5 years, 7 years, and there's going to be a pretty steep penalty to pay. So we're feeling a little, like we're in a little stronger position now, and the world's changing a little bit with the dynamics of the market today and absorption, and we're just but we hate them. Every landlord hates them.
Yeah. Yeah, we do too. I mean, we had a seller come to us recently for a good sized office building, and he had a tenant that was in 80% of the space with a termination option, which basically rendered the building almost unsellable. I mean, yeah, you could discount it pretty heavily and of course sell it, but the risk of that tenant moving was huge, and it was unfinanceable. Yeah, so they can be pretty devastating, can it?
It can be, yeah. And I think. I think both sides are coming around to a little more realistic position now. I think we're going to see a continued diminished component of termination options. Are you're going to have them. Some big multinational companies that it's their policy and they're just not going to take space. But if they hold that position a little too firmly, they're going to get shut out of the market in some cases. Yeah,
and there's other ways to work around those situations for tenants, and we're going to have a 30-year experienced tenant rep on the show in the next couple segments, so we'll talk about some ideas there. And Jim, while we have you here, I mean, you see kind of the latest in interior build-outs and design features. What are you seeing out there today on tenant build-outs?
Finishes are becoming a lot more hip, a lot more contemporary. We're seeing a lot more open spaces and more workstations, but in compensating for the reduced me space, we're seeing a little bit more we space, which is sort of collaborative areas. People are connected today with technology, with their iPhones, their iPads, their laptops, and we're putting Wi-Fi in a lot of these sort of we spaces and lounges and conference rooms, training centers. The things are really changing. Finishes are changing. You rarely see that old traditional office build out that so many law firms use in the past. Even the law firms are going very contemporary, and I think it's part of gearing their space to a younger workforce.
Have you seen any pushback yet from some of these open spaces and less square footage per employee, or any issues from some of these employers and tenants?
Yeah, we're seeing more and more open space. And there's some of our customers still want a traditional, more individual offices in their design, but it's rare that we see a plan without some element of open space.
Yeah, we're in a Highwoods building, and we love it here, and
we love having you here.
Thanks. And we have the same thing. We have a big coffee shop area which faces the Studio One that we're in here today, and there's a lounge over here with open space and a lot of Wi-Fi.
Your space is really typical of what people want today. And it's expensive, but it really I think it's going to stand the test of time, and it just feels good. Walking into your space feels terrific, and we're seeing more and more of that. Yeah,
that's great. Well, before you go, can you give us a tip maybe for some tenants and tenant reps out there related to what's going on in the marketplace?
Activities is up, and we're seeing, the effects of no development over the last 5 years, and with steady positive net absorption over the past few years, and a supply constrained. I think the best advice I can give to tenant rep brokers is make sure your client understands that the market is changing, and for them that they're going to have to be decisive. They can't drag out a negotiation for 6 months anymore. They got to be able to make quick decisions or they're going to get shut out.
Yeah, that's a good point. You can't get complacent and think we're in the same market we've been in for 5 years. Well, Jim, thanks for joining us today. We appreciate you being here.
A pleasure to be here, Michael.
For more
Thanks.
from Jim and Highwoods, visit highwoods.com. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.